Hey everyone, welcome back to Corporate Decoder, the place where we take those super complicated corporate filings and make them, well, a little less complicated. Today, we're diving into a Form 8K from DuPont de Nemours Inc. It's like getting a financial snapshot. But instead of a pretty picture, we get a bunch of numbers and legal jargon. Will it be a masterpiece or a financial faceplant? Let's find out. This report is dated May 25. That's the date of the earliest event they're reporting. So, who are we talking about? DuPont de Nemours Inc. You probably know them as just DuPont. They're a big company originally known for chemicals. They have common stock that trades under the ticker symbol DD on the New York Stock Exchange. Okay, now to the meat of the report, the financial results. DuPont put out a press release on May 2, 2025 about their first quarter results. We're told that the details are in Exhibit 99.1, which is the press release announcing results for the first quarter. And of course, we have the signature, in this case, Michael G. Goss, Vice President and Controller, signing off on the report. It's like saying, yep, we stand by these numbers. Now, because this is an 8K filing announcing quarterly results that are included in Exhibit 99.1, it contains the financials that everyone cares about. Let's get down to it. The first quarter results will provide a feel of what might be coming ahead for the rest of the year. Since it's an exhibit, we need to jump to it using its tag. Here is Exhibit 99.1 that contains the press release. Tats to the date is reaffirmed here as May 2, 2025. Let's check out those first quarter highlights. The report is definitely trying to show investors the key points. Okay, so first up, net sales of $3 billions. This shows how much money they made from selling their products and services. DuPont says that sales declined 1% due to volume declines in electronics. Volume declines means they sold less products overall. GAAP earnings per share, or EPS, were $0.91. GAAP stands for Generally Accepted Accounting Principles, and it's a standard way of reporting earnings. This EPS is the profit allocated to each outstanding share of the company's stock. There's also something called adjusted EPS, which is $0.84. Companies often use adjusted numbers to give what they think is a clearer picture of their earnings, cutting out some one-time costs or gains. So basically they're saying that on a more regular basis, they earned about $0.84 per share. Operating return on invested capital REs was 15.8%. This ratio is a measure of how well a company is using its money to generate profits. Cash flow from operations came in at $0.3 billion. This tells us how much cash the company generated from its normal business activities. Its cash is king, as they say, because a company can look profitable on paper but still struggle if it doesn't have actual cash coming in. Free cash flow was $0 under $. Free cash flow is what's left over after a company pays for its capital expenditures. This is the cash the company can use for things like paying down debt, buying back stock, or making acquisitions. DuPont also gives their outlook for the full year, which is like their best guess on how they'll perform. They expect net sales to be between $12.4 billion and $12.4 billion. And they expect adjusted EPS to be between $3.45 and $3.75 to store. So what's the story here? It looks like DuPont had a pretty decent first quarter in 2025. Sales were okay, but they think they'll be better for the full year. They're also managing their cash flow reasonably well. So now let's zoom out and get the bigger picture. DuPont's been around for a long time and they've gone through a lot of changes, spinning off different businesses and acquiring others. They operate in a competitive industry, so they're always looking for ways to innovate and cut costs. They've been trying to position themselves towards higher growth, higher margin areas like electronics. So this first quarter report will tell if their bet is working out. Looking at these results and the outlook, DuPont seems to be doing alright. The sales are okay, and they're expecting things to pick up. The eye is looking healthy, which means they're making good use of their investments. Cash flow is decent. However, the decrease in sales is somewhat worrisome. Volume decline isn't good because it might mean that they are losing customers. Also, relying on adjusted numbers can be a bit of a red flag, because sometimes these adjustments can hide underlying problems. Overall, DuPont seems to be on a reasonable path, but investors will want to keep an eye on those sales numbers and make sure the company is really delivering on its promises. What do you think about DuPont's results? Are you buying, selling, or holding? Let me know in the comments. And if you like this video, please subscribe for more corporate decoder content.